Good afternoon. Our team would like to present the results of analysis of public joint stock company Alrosa. Alrosa is a Russian group of diamond mining companies engaged in exploration, production, processing, and sale of rare diamonds. Alrosa produces 95% of all diamonds in Russia and occupies 27% of global diamond production. Its projected reserves account for about one-third of the world's diamond reserves. Target share price was determined by using three main valuation methodologies: DCF method, comparable companies, and precedent transactions method. All in all, target price of one Alrosa's opening share is close to 109 rubles with a 29th upside to current market price. During the presentation, me and my colleagues will show the line of our analysis and its results. Now, let's move step by step.
Diamond industry can be split up into three major sectors: upstream, midstream, and downstream. These three segments form a diamond industry value chain, for which rough diamonds are proceeded into polished stones and then into jewelry. The majority of the world's diamond reserves is located in Russia, followed by certain African countries, Canada and Australia. The upstream is a highly concentrated segment with the top 5 players' annual output making around 67%. In 2019, Alrosa's output in natural terms accounted for almost 25%, followed by De Beers with 24% and Rio Tinto with 13%. In monetary terms, however, De Beers is the leader. Its annual output accounts for 36%, while Alrosa's output represents about 29%. It should be mentioned that prices for polished and rough diamonds are decreasing since their peak in 2011. During 2017-2018, the prices remained approximately the same level, mostly because of the increase in the output compared to the previous years. Rising expansion of artificially grown diamonds creates a slight danger for prices of natural stones. Despite their relatively cheap price and good visual characteristics, synthetic diamonds are now mostly produced by industrial purposes. However, the scarcity of natural diamonds might mitigate the risks of their substitutions with lab-grown diamonds. China and Japan markets have shown a rising interest in rings with diamonds and other regions with increasing popularity of Western-style weddings. These are the countries where retail sales of diamonds are expected to grow at a steady pace. Gifting diamonds before marriage and during married life is a significant market as well. With expected growth of middle class in China, rise in non-commitment sales of diamond jewelry may have a positive impact on the whole diamond market. As expected, natural rough diamond supply will decline each year on average by 1% in natural terms. On the other hand, demand is expected to grow up to 2% in real value terms. Thus, a shortage in supply will result in positive pressure on diamond price.
Alrosa is the leader of diamond mining industry. It has highest EBITDA margin compared to its closest competitors. In terms of production, Alrosa is the leader as well, compared to De Beers, which has 32 million of carats of annual production. Alrosa has 40 million, but Alrosa's reserves are almost 2 times higher than De Beers.
Alrosa was founded in 1975 in the city of Mirny in Republic of Yakutia. The main shareholders are the Russian Federation and other legal entities and individuals. The company is engaged in the exploration, production, processing, and sale of rough diamonds. Alrosa owns 6 mines in the Republic of Yakutia and 1 in the Arkhangelsk region. The largest share of revenue, it's about 32%, is accounted for by mine Aykal, which is located in the Republic of Yakutia. As 2018, the proven and probable reserves of Alrosa are 141 and 484 million carats, respectively. Based on the analysis of the company's financial statement, it was revealed that between 2016 to 2018 revenue decreases with a constant increase in the share of EBITDA and net income in the company's revenue.
We have collected data for trading comparables of Alrosa. These are diamond mining companies with revenue of more than $20 million. The results show us that based on enterprise value to last 12 months production, Alrosa is undervalued. Based on enterprise value to revenue multiple, Alrosa is slightly overvalued. But when we take into account EBITDA margin, we can say that Alrosa is undervalued significantly. as well have collected data for precedent transactions, and based on enterprise value to resources multiple, we can say that Alrosa is undervalued by $2 per carat.
Now let's speak about discount cash flow method key inputs. Alrosa is a cyclical business depending on seasonal market changes, so production and revenue were forecasted quarterly based on historical data. We suggest the company will not reduce its production during the forecast period. Moreover, we consider production rate will stay at the same level. Our thesis is confirmed by Alrosa's management expecting 38-39,000 carats production in the end of 2024. Prices for gem quality and industrial diamonds were projected based on interviews with diamond industry experts and their opinion of future price levels. Discount rate was calculated based on weighted average cost of capital methodology. According to our analysis, it's close to 12.5%. Now let's see DCF outputs. Cost of goods sold are driven by sales volume, so they were calculated as percent of total revenue. In forecast period, direct costs will fall as a result of increase in company's operating efficiency and fixed at the same level as in 2016. Selling, general and administrative costs are mostly represented by wages, salaries, and service expenses. Such costs are not tied to sales, so they were projected based on Russian Consumer Price Index. Capital expenditures projections are based on Alrosa's CapEx program till 2024. Total amount of capital expenditures in forecast period is close to 120 billion rubles. Enterprise value was determined as the sum of discounted free cash flows and terminal value, which was calculated using Gordon's model. Terminal value representing a significant part of the enterprise value, because company's assets have a long term of use and will generate enormous amount of revenue in the future. According to EV calculation methodology, enterprise value should include its own operating cash flows, ignoring non-operating assets, so our results should be adjusted. Due to lack of information, we couldn't separate non-operating cash flow during the business valuation. We didn't make final adjustments based on non-operating assets and cash flows. Enterprise value was adjusted for Alrosa's net debt as of 30th of September in order to calculate equity value and share price. Our calculations are represented on the slide. According to financial model, target price for Alrosa's ordinary share is 109 rubles, that is confirmed by using other valuation methodologies. So our analysis shows a significant upside to current market price, which says about great perspectives of the business. Based on company operational and financial analysis, as well as market environment, our recommendation is to buy.
Price risk. We mark this risk as highly probable because of current market conditions. The company implements price over volume strategy, which result in a lower sensitivity to current market conditions. Risks related to competition with other luxury goods and scientific diamonds are partially mitigated with active marketing program. Currency risk. A mitigator of the risk is the fact that Alrosa has the highest EBITDA margin among largest peers and working on operating efficiencies improvement. Ruble strengthening is not extending to be a long-term trend. As an additional hedge against currency risks, more than 90% of Alrosa's debt is denominated in dollars. That is why currency risk will not have a long-term negative impact on Alrosa's financial results. Regulation risk will not influence sale purchase operations with minority stakes of Alrosa at least a certain level of foreign ownership is reached. The next is resource depletion risk. Sustainability of Alrosa production is closely related to the company's ability to maintain its resource and reserve base. Alrosa invests large funds of exploitation and production development both in Russia and globally. Sanctions risk. Alrosa is headquartered in Russia and can be subject to limitation imposed by Western countries. Possible registration in another country will change the company's structure. And the last, environmental risk and employee accident risk. We marked as low probable one. Dear colleagues, now I would like to make a conclusion, and we consider Alrosa to be a great investment opportunity to the mid-term and long-term horizon. Thank you for your attention.